I think that they're all appropriate for some investors, but for the ordinary investor that I'm thinking about right now, a person like myself perhaps that's accumulated their retirement plans, and it's very important that they receive safe but reasonable returns on those investments. I certainly think that taking an asset allocation and putting 20, 30%, something like that, into alternatives can be appropriate. The question is the question that's been asked and is appropriate is, well, I listed three major categories. One was hedge funds and managed futures. Do I think that's appropriate? Absolutely. That's where these 1040 acts are coming out. Excuse me, they're called 40 Act mutual funds. These regular mutual funds are coming out, and that's a great way to invest, managed futures and hedge funds. Also in the real asset space, we can get involved with MLPs, and we can get involved with REITs. Now, some people would think that REITs, real estate investment trusts, have been around so long that they're really not traditional, and I wouldn't necessarily disagree with that. It's just a matter of semantics. But if you don't have REITs in your portfolio, and I do consider them to be alternative, I think that can be a valuable way to get exposure to underlying real assets, in this case, real estate. MLPs, a good way to get underlying exposure to natural resources, especially the energy sector. And a third major category is private equity. There's another category I haven't even talked about, which is structured products. But the third category of private equity, you can get exposure to that in a investor-friendly format through things called business development companies. It is difficult still for the ordinary retail investor to get exposure to private equity the way that the large institutions get exposure, and that's one of the reasons that I probably haven't emphasized that in this discussion. A lot of the major leveraged buyouts and venture capital opportunities are really primarily accessible to very large institutions who are very experienced in these matters, and they have great connections and access. There's not as much available to the individual investor. I think that's something that's going to change. I think in the future we're going to see the mutual fund concept being applied to more and more alternative investments. It can't be applied to all of them because one of the things that these mutual funds offer that most limited partnerships do not offer is liquidity. When you buy an alternative investment-oriented mutual fund, you have very good liquidity. If you want to get out tomorrow, you can get out tomorrow, and it's not a big problem to the firm. Some alternative investments are very illiquid, and they don't fit inside of that structure. So I think that the landscape will continue to change, but right now I'd say some of the major places to invest into alternative investments would be to use these new alternative asset mutual funds, real estate funds, MLPs, and hopefully and maybe some business development companies, and hopefully in the future we'll have more opportunities.